wrap-up, and this wrap-up is for Friday, the 14th of October, 2022. Wanted to get it out so you could watch it during the weekend. Well, what a week, right? You had a flash rally. You know, we always hear flash crash. You had a flash rally yesterday. And do me a favor. If you haven't learned by now how important I think Bollinger Bands are with the way that I teach slow stochastics, please do something about it. You avoided that yesterday if you paid attention because you went down to those key numbers in stock indices one after the other. You didn't do it in every one. You missed one or two of the indices. You got them certainly on the major two ones. And then the market took off, all right? And it happened in other markets all over the place. Please learn it, okay? Don't rely on this because you see these and then it does it in the morning and you don't know what to do with it. Learn from it. At least open your mind up to see what I do. Do I walk on water? I don't. Do I have a better mousetrap with it? I do. I really, from my gut, believe that. So maybe you learn something with it. After this, after I talk here, take a look at this. All right. So we had a CPI numbers that are just red hot. They haven't yet done the lag. Now remember, inflation, the beast inflation is like a tanker of oil. You know, they're like 3-4 football fields long. They're wide as can be. And you're somewhere 3 miles or more offshore, maybe longer, that the captain starts slowing down and he's doing everything because it's so cumbersome in order to get it to where you can take all the oil off. Well, that's what we're doing. The Fed keeps doing this. The Fed is pumping the brake out at sea until it can see that CPI number is rolling on it. It hasn't rolled yet. So what are they doing? They just keep pulling back. He's not headed to port yet. He's still slowing his thing down. Well, that's what we're at. The Fed is trying like a captain on a ship to find out where everything's finally kicks in and he can start grabbing control of this big monster and move it around. It's the best way to explain what is going on. The problem in part is the core CPI. The headline number means nothing to me. It's a sucker number. The real number is what the Fed looks at. And rent is a big part of that. So the problem with rent is, you know, everybody that just signed new rent deals because they can't afford homes, most people aren't getting a 1-year lease. They're going for more. They're generally 2-year lease. You go in, you're painting, you're decorating, you're doing whatever. You know the game. I'm not new to this, okay? I've done it in my life. Other people do it. Son does it. You know, everybody does this. Well, unfortunately, if you do a 2-year, the landlord's going to give you a kicker. He's not giving you the second year for the price of the first year normally. You know, you might have a great landlord that does, but generally they don't. And I've never seen one say, yeah, come on in and pay me $4,000 a month this year, and next year when your lease comes up again, we'll do it for $3,500. Sure. You know that's not going to be the case. Okay. But the new leases do look at the new environment. And maybe there's not as much demand for those rentals. The people that had a rent did it already. You got new properties always coming on the market, right? They're finishing buildings. If you're places like Chicago, there's always a new building going up. So there's always some competition, and whatever they got to do, they do. There's games they play. They'll go, no, I got to get that $4,000, but I'll give you 2 months free. Why? Because they can then tell the bank what they're getting for that, and the bank's looking at the income, and the free month's rent don't matter. It's the income that's coming in. There's games that are played, and if you understand how the finance works for the person running that building, and I'm talking bigger buildings, obviously, you get that game that they have to work with, and they will. So, are we there yet? I don't know. Okay, I'm not out in the rental market, but generally when it's tight, they don't have to give anything, and when you really see that it's loosening up a bit, that's when you're going to see those things come. So watch those type of things. But I'm leading you into metals. And the reason I'm saying all this is because we're in an environment where the Fed isn't taking its foot off the throttle yet, which means you're fighting an interest rate. I don't care if the dollar keeps going up. You're fighting an interest rate. It competes for that right there. It's easier to get. You realize you're like 4.08% on a 10-year note today. Okay, what are you in the 2-year? You're 4.25, higher than that, 4.5. That's a pretty good return versus a 6% core CPI. You're competing with it because this pays you nothing. You're just betting that that'll hold value, and the inflation scenario, because of the high dollar, has hurt the metal market. Silver, that. Copper market's got its own set of issues. They can be bullish or bearish because the People's Party, Congress starts Sunday. And when that begins, we're going to get what President Xi wants to do with the market. Is he going to change his COVID policy? What's he going to do for the housing market, infrastructure? He has one-handed hurt their economy. He went to what I'll call Eastern medicine, okay, which is let's keep everybody in their house, versus real vaccines that work. The word is work, okay? Versus a combination of the two. We in the West and America and Europe, we went into the lockdowns, but then we found the vaccines worked. When's the last time you saw an area in Europe or America go into the lockdown? China's in lockdowns now in different areas. You don't have to do that. What's he done? He's driven out demand for his products in China. He's given, Thailand's applauding him daily. I would be. Indonesia, I'm applauding you daily. Keep doing it. I like your policy. It works real well. You think I'm wrong on that? I don't think so. So in the gold on a monthly basis, you're in the toilet. Does that look to you like something you want to own? I realize you're good enough to catch with that butter in your hand, that falling knife. You're going to do it. Why? Wherever it bottoms, it's going to bottom. When it's done, it's not done. Market is still bearish on the weekly closes. You're coming into support at the Bollinger Band. The resistance temporarily is the 200-week average. Normally, you get a 200-week average. What is it? It's a 4.5-year average. It's a big number. And markets with a combination of a Bollinger Band like to stop there. I call it the deadly combination, because more times than not, it stops if the market was declining, and if this were on the top side, it stops a rally. Does it have to be a turning point? No. Does it just do it all of a sudden? Not often. You'll fight the battle, and that's what you're doing. Could this turn out to be a bottom? Sure it could. Is it so far? No. What do the odds favor? The odds still favor that you're going to 1620. Remember, I was talking 1630 back up over here? People were laughing at me. I had people write, you really think it's going that low? I said, I don't know. I said, I'm not on CNBC where it's going to go to this exact number. I'm a chartist that is saying it could go easily to that 200-week average, and I don't know where the Bollinger Band would be at that time. You can't figure that out. But you see it after the fact. And after the fact, the 1620 level still support. You've already been down here. Whoa. So you're in a zone. That's all you're in. Are you embedded? You're not. Okay. Is it a good spot to get short? No. On the weekly chart of swing lines, you're bearish. Lower highs, lower lows. You've been maintaining this pattern all the way through since here in April. What are you fighting this market? You've had that. Number two, once you got underneath in April, the 18-week, when's the last time you were over it? So your filter, the word is filter, has been bearish. And that's what you want as a chartist. You want to have a filter on a market. You want to be able to say, I got a pattern of higher lows, higher highs, or lower highs, lower lows, or nothing. And you get a signal out of it. Your magic work, and that's what charts are, they're tea leaves. Your magic work comes together, and it says, I got to buy, or I got to sell. I want a filter on it. I want several filters on it. And that's the difference between a guy just being a chartist and what I call guys that are really chartists. And one of the filters is, are you under key moving averages? First thing. Where are you in relation to Bollinger Bands? I'll let the suckers sell under a Bollinger Band or buy over a band all they want. I want to be the opposite. If I had to make a bet over and over against them, that's it, because that's what the casino's doing. The casino is saying, you're only going to stay over that band 5% of the time. You are going to get a hot streak. You're going to do everything wrong, and at some point, you might be one of those guys that walks out of that casino with $1 million in your pocket. But for you, there's 95 others out of you, okay? You might be the only one, actually. There's going to be 95% of the people, not of the others, that are going to lose on that setup over and over. And that's what the casino is built on. Every day in the casino, there are winners. You know that. If there weren't winners, nobody would go. There are winners. But their percentages aren't 95%. This is different. Their percentages are, they know they're going to win X percent every night for a person that sits at a table, plays a machine, whatever it is. Everything comes down to the percentages. Fill the casino, they're going to make money. In the weekly chart here, what do we have? Momentum, down. I don't count oversold, overbought on weeklies, just down. You're fighting a battle between the 200-day average and here. If you can clear all this, the resistance becomes the 18-week average of closes. Gold-silver ratio. So we were, for a bit here, trying to be better in the silver market. Remember, we were like this. Once you lose and get over that number, you've broken the pattern of lower highs, lower lows. And that's what the market did. Battleground, typically, going to be that 18-week average of closes. What is silver doing? Silver got up. Remember, gold was going down. This is the difference in the spread. Where did it peak out? What did I just tell you about the 200-week average? It's an important number. It's a 4.5-year number. It went up to that number. It failed there. It failed there. When it finally started failing back here, it became a resistance point. When support gives way and the market falls under it, on the way back up, that number doesn't go away. It's there and it becomes resistance. You can certainly go through it, but that's what it becomes. And that's what you're doing in that particular chart now. Copper, you're fighting a battle between the 18 and the 200-day average. The trend is absolutely down. Momentum is not bearish. Momentum is trying to pick up. Bias is down. To get bullish, you've got to cross 359.30. That's about 17 cents higher. Could it happen? Like that, depending on what China decides to do. Why am I so enthralled with China with this? Who consumes half the world's copper? In normal economic times, that's China. They're the elephant in the room. For the rest of the world, bearish. Bearish, you heard me. Who's buying more durable goods? You see them slipping away, okay? People are scared right now. People keep watching their investment in stock markets around the world, not just the United States, and they are doing terrible. So people are going, yeah, at first we had to do our house, and now, I don't know. Why do you think Lowe's, Home Depot, Menards, all these other companies, the big boys out there are in trouble? It's because people did that, and now they're hunkering down. That's what you do. Platinum, bullish. Can't believe I got that word coming out of my mouth. Higher lows, higher highs. Again, what did I just teach you? You get under and you fight that 200 week. When you come back to it, it's often a resistance point. Here you got to it, here you're to it, and here you're to it. Are you getting the basics? Well, that's how you learn what to do down here at Bollinger Band points from me. And you learn how to play them if you lose the embedded reading. Where's the market often going on it? Dollar index. Okay, you have an embedded reading. Until that red line closes underneath 79, breaks in this market are buys, looking for each time for you to lighten up as you get to the Bollinger Band. Eventually it won't work. Nothing works forever. So as the market keeps coming down on these breaks, when you're buying less. But at the beginning of them, you're more aggressive. I teach in the course, in futures, the average amount of time you can buy on that break before it doesn't work. Could it go longer? Could it go shorter? Of course. But there is a number that you start going, that's not the same how it works in ETF stocks. Leverage is different. Changes the game. So you want to learn all this? It's pretty simple. Learn how to work with Bollinger Bands. At the very least, you may never use it. At the very best, it's going to be part of exactly what changes your trading. It's a big tool. It's not a little tool. It's not a secondary. It's a primary tool. Take a look at this. Welcome. I'm Ira Epstein, and I'm here to talk about